Dear students, this is the second problem with regard to final accounts of non-trading concerns. I shall read the question in the usual manner and you may write it down. Please note the question. From the following particulars extracted from the ledger of Kerala Music Council, prepare receipts and payments account, income and expenditure account for the year ended 31st December 2013 and a balance sheet on that date, providing 5% depreciation on furniture, 10% on musical instruments and 2% on building. So from the very outset it is very clear that this question wants to prepare not only income and expenditure and balance sheet, it requires us to prepare a receipts and payments account as well. That is the main difference of this question or the peculiarity of this question. Next is balance sheet as on 31st December 2012. T-shaped balance sheet, left hand side liabilities, amount rupees, assets amount rupees. Outstanding creditors 5,000, capital fund 1,95,000, cash in hand 35,000, investments 60,000, outstanding subscriptions 2,000, musical instruments 45,000, furniture 8,000, building 50,000. The total being 2 lakh on asset side and 2 lakh on liability side. Next paragraph. The transactions for the year were receipts. From this that I am going to say, we have to prepare a receipts and payments account. First one is receipts, or you can say particulars, rupees. Next is receipts. Subscription received 40,000, interest on investments 3,000, then payments. Printing 1,000, petty expenses 500, outstanding creditors of last year paid 5,000, general expenses 3,000, musical instruments purchased 6,000, entertainment expenses 15,000, annual day dinner 10,000, salaries 2,500, rent 500. This is the items with which we have to prepare receipts and payments. Next line. On 31st December 2013, the following amounts were outstanding. First one, salaries 500, rent 500, subscriptions 6,000. From the informations given, we have to prepare 2 accounts and 1 statement. That is, 2 accounts are receipts and payments account and income and expenditure account. And the statement is the financial statement as on 31st December 2013, that is the balance sheet. So first of all, we have to prepare receipts and payments account. For preparing receipts and payments account, we require actual items of actual cash payments and actual cash receipts, and the opening cash balance, if any. The balance sheet that is given here belongs to the opening balance sheet of 2013 or closing balance sheet of 2012. From that balance sheet, we can find out the cash in hand. Cash in hand on the closing date of 12, that is 31st December 2012. Therefore, that 2012 figure, that is closing balance of 2012 with regard to cash, is the opening cash balance of 2013, that is 1/1/2013. So, while preparing receipts and payments account, on the receipt side as the first item, we may write to balance carried down, brought down cash, that is 35,000. Then on the receipt side, on the left hand side, we may write subscriptions received, that is 40,000. Interest on investments, that is 3,000. Then we may write the actual amount paid for printing and stationery, that is 1,000. Actual petty expenses, that is 500. Then outstanding creditors of last year. All cash payments will be recorded irrespective of the period to which such payment belongs. So outstanding creditors of the last year paid, that is 5,000. Then general expenses paid during the year, that is 3,000. Then musical instruments purchased, that musical instruments purchased, that is 15,000. Then annual day dinner, that is 10,000. Salaries paid during the year is 2,500. Then rent is 500. These are the less payments of the year, that is 2013. Then we balance it, and the balancing figure will be the closing balance. So only the only difference in this question is, we are not given with receipts and payments account of 2013. We are given with the descriptions of the transactions of 2013, and also we are given with the opening balance sheet. And from the available information, we have to find out the closing balance. In order to find out closing balance, we worked out the receipts and payments account. That is, by taking into consideration all cash payments and all cash receipts. Then we prepare in the usual form income and expenditure account, and then the balance sheet. This is the explanation with regard to receipts and payments account. And next is income and expenditure account. So we are going to explain how income and expenditure account is prepared. So all expenses, namely printing and stationery, is debited on the debit side of, that is expenditure side of income and expenditure account. Then petty cash expenses are there. Then outstanding creditors paid for the year. That means previous year's creditors is paid for the year. That is not recorded in this book, because that amount should not find a place in this year's income and expenditure account. Then we write general expenses. Then next is musical instruments purchase. That musical instruments is not an expense, that's an acquisition of assets, therefore the same may be added to opening balance of musical instruments. Next is entertainment expenses. Then annual day dinner is there. Then salaries, that is 2500. To that salaries we add salaries outstanding of the current year, that is salaries outstanding is 500. Then rent is there, is amounting to 2500, and then the outstanding outstanding figure is added, that amounts to 500. So total rent is 500 plus 500, that is 1000. Then there is depreciation, that is given in the first paragraph. For that, depreciation is 5% on furniture. Here the value of furniture is 8000. That means 5% is 400. 5% of 8000 is 400. And 10% on musical instruments. Musical instruments, here it is 45,000. Even though we are given with the purchase of musical instruments, we are not given with the date of purchase. Therefore we can calculate the depreciation only on the basis of the opening balance. The opening balance of musical instruments is 45,000. That is 10% of 45,000 is 4,500. Then the building amount is 50,000. The depreciation on building is 2%. That is 2% of 50,000 is 1,000. And the total is written on the outside column. Then there is subscription, that is the income of the year, that is subscription received during the year, that is actual subscription received during the year is amount in cash received as subscription during the year is 40,000. To that we add the subscriptions outstanding during the year, that is subscription outstanding during that is the closing balance of subscription during the year. That means 6,000 is the closing balance of subscription of the year. That subscription amount is the receivable figure. That amount should be added to the actual figure of subscription received during the year. Then there is one more item is there in the opening balance sheet, that is outstanding subscription rupees 2,000. Since nothing is stated about the receipt of outstanding opening balance of outstanding amount of subscription, we assume that the total amount of outstanding expense of subscription given as the opening balance is received during the year. But in order to write the income, actual income received from the subscription, we deduct the amount belonging to previous year and amount belonging to coming years as well. Here we are given only with the amount belonging to previous year. Therefore, we deduct rupees 2,000. So, to the total subscription received during the year, that is 40,000, we add subscription outstanding on the closing balance, that is 6,000. Total subscription received is 40,000. Closing balance of outstanding subscription, that is subscription accrued but not received, that is 6,000. That comes to 46,000. And then we deduct subscription outstanding on the opening balance, that is 2,000. Then we get 44,000 as the subscription, as the income of subscription during the year. Next is interest on investments, that is 3,000. Then we balance income and expenditure account. If the debit side or expenditure side is higher than credit side, that is income side, the balancing figure will come on the income side, that amounts to deficit, and the same may be deducted from the capital fund to be shown on the liability side of the balance sheet. Then if credit side, that is income side, is higher than the debit side, that is expenditure side, that is surplus. That surplus is transferred to capital fund and the same may be added to, and thus this income and expenditure account is closed. Next that we are going to write is balance sheet. In the balance sheet we have to take, on the liability side we have to take salaries is 500 and the rent is 500. Then we write capital fund. The capital fund is opening capital fund. That opening capital fund is 1,95,000. To that we adjust the resultant figure of income and expenditure account, deficit or surplus. If it is deficit, the same may be deducted from capital fund. If it is surplus, the same may be added to the capital fund. And the next is, first item is cash in hand. Cash in hand is the closing cash balance. Closing cash balance is the balancing figure of receipts and payments account that is written. Next is investments. Investments is 6,000 and next is outstanding subscriptions, that is 6,000, that is given in the adjustments. Then we are given with musical instruments. Musical instruments, that is the opening balance of musical instruments, that is 45,000. Then we deduct depreciation of that figure. Depreciation of musical figure is, percentage of depreciation of musical figure is 10%. So from that opening balance of musical instruments we deduct depreciation, that is 10%, that is 4,500. Then we add the musical instruments purchased during the year, that is 6,000. Then next item is furniture. Furniture is 8,000. From the opening balance we calculate depreciation, and that amount of depreciation may be deducted from, that is 5% of depreciation may be deducted from furniture, that is 400. Then the next item is building, that is 50,000. That 50,000 is the opening balance of building, and the depreciation belonging to building is 2%, that is 1,000 is the amount of depreciation, or the depreciation to be deducted, and the balancing figure may be shown on the asset side of the balance sheet. Then we total the two sides of balance sheet, that is liability side and asset side. The two sides will be the same. So here first of all we have to write receipts and payments account, then we prepare income and expenditure account, then we prepare balance sheet. This is because we are not given with the receipts and payments account in the question. We are given with the opening capital balance. We are given with the percentage of depreciation to be charged on certain assets. We are given with items of expenses and items of receipts. From that item of expenses and item of receipts we prepare a receipts and payments account. Then we prepare income and expenditure account. Then we prepare balance sheet. The working of this problem will be done in the next video. Thank you very much.